now, and also what my future expectations for rates are going to be. Current rates today, the average for the United States over the past week has been, well, I guess the past day, is 5.1% for a 30-year fix, and that's with no points. And ours today, we're at 5.25. For the past week and a half, we were down as low as 4.75, and obviously that kind of spiked a mini refi boom, and that's kind of where we've been right now. Historically, we're still at a 37-year low. I keep on hearing 40, but everything I read is 37, so I don't know where people say 40. Maybe they just like to round up or something. But it's an amazing time to buy and to refinance. So I mean, the rates are just ridiculously low. And I think it's definitely a result of the government dumping in $500 billion into the mortgage market to buy up mortgage-backed securities on Wall Street. As soon as that announcement hit, they just dropped really fast. But I was reading an article today. Even though the rates have been going down, there's still people who are complaining that the rates are still too high. And I think no one's ever going to be happy, but and specifically about jumbo rates, and I find that really funny. But
those are the lowest yet, right?
Yeah, this is the
what are jumbos at?
Jumbo right now. For us, they're 0.5% over, so we'd be at 5.75 today, or you were at 5.25 the other day. So it's pretty dang low for a jumbo rate. Anywho. That's what we're looking at now. As far as qualifying, I keep on hearing, on a daily basis, I get calls from people saying, can I really even qualify? I keep on hearing that there's no money to be lent out there, and I'm not going to qualify anymore. But I found that it's not really that hard to qualify, and there's still lots of money to be lent, and I think that that's going to continue. However, on that same token, for people who have not so perfect credit or not enough equity in the home, it's going to be tougher to qualify. They'll still give you a loan, but they're just going to make it very unreasonably priced. Like Fannie Mae and Freddie Mac just came out with these new fees starting in March. They call them loan level price adjustments. They're charging 0.25% on all loans, calling it an adverse market fee. Yeah. Thanks, we know, right? Yeah. So not only are we paying them on new loans, that 0.25%, we're also on the bailout with your taxes, right? So they're getting hit on both ends. Feed to death, nickel and dimes, right? But so there's that base of 0.25%, and then on top of that, if you have like a lower credit score or a higher loan to value, you can be hit out. And if you're doing like a refinance where you're obtaining cash out, you're pretty severely hit. I'll just show you an example really quick. I've got my little matrix here. Let's say you have a 680 credit score. You're doing a refinance at 80% of the value of your house, so not too unreasonable there. You have a 2% fee there, and then on top of that, the credit score fee is another 0.25%. So you have a 2.5% in fees alone of the loan amount. So that could be pretty significant.
That's with a 650 score?
That's with the 680 score.
680, and 680 is about average.
That's the average credit score. So, it's definitely tough for people who have the average. You have to be, kind of above average. Luckily in Boulder, this is a very qualified market, so we haven't seen too much of a dip in business. In fact, this is the busiest month I've ever seen. January, it's ridiculous. Like, I can't even tell you. But, yeah, so... But on the same token, though, if you have over a 740 credit score and a low loan value, like under 60%, you are actually able to have no fees whatsoever. So definitely rewarded for good credit and penalized for not so perfect. I'll quickly jump into, is it worth to refinance right now? Obviously that's a case-by-case basis, so I'll give you a specific example. Let's say you had a $260,000 loan. At 6%, you're paying $1,558 per month on a principal and interest. And right now, if we go back down to 4.75, and you've paid down $10,000 to $250, you're going to be saving $254 a month to $1,304. If it costs you about $2,500 to refinance, which is about the average, you'll recoup your costs in about 10 months. What's your cost-benefit analysis for your own personal self? I don't know, but 10 months is pretty quick to recoup your costs. But if you paid down $10,000, you've also been paying on it for 3 years. So what about that end? Where do you make up that benefit? And so the way you look at it, is you take that $254, and if you were going to pay that back on additional principal, how far, how quick would you get it paid down? In this instance I was just talking about, if you did pay back that $254 on your new loan per month, you pay off the loan in 21 years. So it's definitely, if you're comfortable making the payments and you just want to refinance it, definitely makes sense to pay off that loan a lot faster. So 4.75, not too shabby. My predictions for the future, everything I hear, the water cooler talk, things like that, we're going to be at 4.5% in the next probably 2 weeks. So I don't think we've seen the bottom here. So yeah, the economy really stinks, but it's a good time to do mortgages. So yeah.
Well,
Is it going to go to?
before you go to questions, I'm not sure if, and I should have introduced Joe.
Yeah.
And Joe Wilson's with Elevations Credit Union. There's a strong reason I invited him here. They're very consumer focused, and we're actually customers as well at the bank. As strong advocates of that, and I want to make sure your contact info is out there.
Yeah.
What's your phone number, Joe?
303-441-5889. Yeah, quick plug for Elevations. We're a credit union, so we're definitely consumer focused. It's not for profit organization, but we're still slamming a little bit of profit.
And
there.
you're not even compensated like a typical broker, which
No.
is the big advantage to me.
Yeah,
I
no
felt like I get
origination
sent-
fees or anything like
right.
that. So definitely the lowest. I've worked for other companies, and this is definitely the lowest fees I've ever seen anywhere, and pretty quick turnaround time as well. We're all in house, and we don't sell the loans off, so which is nice as well.
That's great.
Oh, in-house loans?
Yeah, so we do have a little more flexibility on, qualifications or qualifying, but we do transfer the risk to Fannie or Freddie, which is why there's additional fees. But basically 90% of lenders do that. So yeah,
That's cool. I didn't know that about the in-house.
yeah, it's nice.
You were first. Go ahead, but
You go ahead, because now I forgot my question. That's yours.
Well, I actually have a few questions I think require short answers. One, you're talking about primary residences only, right?
Well, my specific talk was about primary residences.
And it's real different for investors, isn't it?
Investment properties, yes, it does get a little bit hairy. For us specifically, we add 0.5% on to the rate. So for investment properties, and depending on your loan to value ratio, there's some additional fees as well.
Loan value, just like on the other, if you're like 60% or less? Or?
So the ratios are 75% or less, or 75 to 80, and 80 to 85. And once you get it, it's best to be under 75%.
That's the lowest cutoff.
Yeah, it's the lowest cutoff, so 75 or under.
Okay, and the down payments you're requiring for primary residence or investment properties, is it different? How much is the typical minimum down payment?
Yeah, so investment properties were required at least 15%, and primary residences were at 5% down. Yeah. However, we are.
Did you say 5%?
5%. Yeah, we are working on. We'll be FHA approved here in the next month or so, so we'll be able to do 3% down.
Nice.
Yeah. But I'm not really sold on FHA.
And
but
finally, do you on your with refinancing and no cash out?
Mhm.
There's penalties for cash out, right?
Right. There's penalties for cash out, and yeah.
And this is just on primary residence. So if I have a HELOC
Mhm.
on a primary residence, does that count as a refi?
It does. If you're just refinancing the HELOC, or the first in the HELOC.
Just say I just have a HELOC on.
You just want to refinance the HELOC?
Yeah.
That's a whole separate deal. And
It's not
actually,
considered their primary.
well, no. These are for. I'm specifically talking about first mortgages only.
Right, but I
if
want to
you-
refinance it into a first mortgage.
Your HELOC into a first mortgage?
Yeah.
Yeah, that'd be a cash out refinance then.
That's called cash out refinance.
Yeah.
So is the 4.5, that's just an arbitrary number that the feds came up with? We want to see interest rates that low, or is the market pushing it that low? Or
So you're talking specifically about
The
the
4.5%.
plan that's been put out there. Yeah, so that 4.5% that people are talking about is going to be for primary residence purchases. And that's what the plan is. It hasn't been put into law or anything yet, but it'll be probably just for primary residence.
It's a
first
plan that
purchase.
Obama proposed, but
Yeah.
it's also, none of the details have been announced, it's just
So
thrown
It's
out there.
conjecture at this
Okay,
point.
so it's,
Yeah.
so